Another boring banking crisis is upon us. And let me tell you, this probably does not affect any of us, certainly not me, or 99% of the people in this country. This is another issue of the rich. If you have $250,000 in a bank or less, you are protected by government insurance, FDIC. This has no bearing on us whatsoever. It is about rich people, though. I mean, big tech companies, rich people, including two guys from Shark Tank. Mark Cuban and Mr. Wonderful both had millions of dollars in the Silicon Valley Bank. And isn't it fun how quick the government moved to protect the rich and to make sure every penny is protected and covered by taxpayers? You got to love that. And listen, let me just say this as a side note. If you're rich and you've got more than $250,000 to put into a bank, you need to realize that if something happens and the bank goes under, you will lose that money over $250,000. The end result of that will be you want to invest in banks that are less risky, more secure with your money, so you get a return even though it may be smaller. But now that the government's going to bail them out, then this encourages rich people, banks, to just be as risky as they want because they know the taxpayers are there to buy out and to bail out the rich and the banks. So that part is just awful. Now, let me make this bank run, which is just a traditional, historic, boring bank run, just like in the Great Depression. If too many depositors show up at once to get their money out, listen, no bank is that liquid. And so then a run comes and people go crazy. This is probably caused by government, the Federal Reserve. I mean, for over 10 years, we had interest rates down near 0%, which was free money for these banks. And now, in about a year's time, the Fed has raised rates 5%. That is insane. I've told you so many times, this is an effort to destroy our economy, and it affects banks also. So in SVB's situation, they had invested tons of money in bonds that had lower rates of return. Now they can't get out of those, and rich people are saying, wait a minute, we want to take our money out, put it in higher return bonds and investments. Not a possibility, so we have this thing that happened. Now, you got to make it sensational and, attach conspiracy theories to any issue. So on the right, they're saying, hey, this is because of woke politics. This bank was, tied to Black Lives Matter, other progressive movements. And then on the left, Elizabeth Warren wrote an op-ed for the New York Times that blamed Donald Trump, of course. Back in 2018, she said that he took away some of the regulations from the Dodd-Frank Banking Act of 2008. By the way, don't you love the fact that Barney Frank, one of the co-authors of that bill, was on the board of directors of, Signature Bank. And well, anyway, it's just lovely when regulators, when they retire, they go to work for the very companies they regulated. I love that also. But the bottom line for those of us who don't have more than $250,000 in any bank, this is a big nothing. And of course, as always, will we learn anything from this? Absolutely not. And most of you will vote for the next guy, next lady who promises more government and more regulations, even though they're awful and useless at what they do.